Thank you for staying tuned. And for domestic markets update, I'm being joined by Damilola Akimbami, Head of Research at Financial Derivatives Company. Good morning, Dami. Thank you for joining us.
Good morning, Chimeze.
All right, we've seen the oil price make a comeback, perhaps from what Kuwait has said, planning to cut its production even before the OPEC agreement gets to the time they are supposed to cut this production. Does this give any kind of hope that probably we might see some kind of rebound in the near term?
Oh, well, yes, Kuwait has mentioned that it's going to cut his production, but the impact has been at best mild on oil prices. The recovery is still relatively low. Oil prices trading at $21 per barrel is still quite low, and that's because of the weak demand that is still prevalent and the storage capacities that are running out. So the fundamentals are still weak, and that's what is actually capping whatever gains that we're going to see in any production cut. And even when OPEC and its allies finally implement 9.7 million barrels output cut as from May, demand definitely has to pick up before we'll be able to feel the impact of that output cut.
Now, we've seen some kind of tension brewing between the U.S. and Iran, with President Donald Trump threatening that the U.S. will destroy any Iranian gunboat. I mean, that also is contributing to what we're seeing in the oil market. And, of course, Oklahoma also trying to make some kind of cut there. So wouldn't that also offer some kind of optimism in the market? Yes,
but you know, people would say that if prices are down, one of the oldest tricks is to threaten that you're going to do something, maybe in terms of an attack or what have you. And that's what actually triggered the rebound that we saw yesterday. So that plus even Kuwait is yet to have any impact, because under normal circumstances, if the demand was still there and if there was storage capacities still available, that kind of threat from the U.S. plus Kuwait's production cut should have pushed oil prices to at least $25 or even close to 30. But at 2021, you can see that the impact of that non-existent demand is still capping whatever gains that we would see from supply shocks.
Well, now we're seeing some countries trying to actually ease the restriction and all that. If that happens, even though the world is still trying to deal with the real issue, which is COVID-19, if that happened, how much of impact would also that have in the demand side of the market?
Well, so that's what we're actually hoping for, that the recovery starts soon, and with countries saying they're lifting restrictions at least in stages, that definitely means that companies that have been shut down, businesses that have been closed, will start to resume and recover, and which is good news, because then demand picks up, aggregate output also picks up. But however, there are still concerns that the economy might actually, or the global economy can actually even fall into maybe like a V-shaped recovery, meaning you have a recession and then a swift recovery.
But and how long would that?
That's another issue, because the thing is, right now, the IMF is even projecting that the output or the outlook forecast that they released in its World Economic Outlook report in early April may actually be too optimistic, meaning that this slowdown may actually extend for quite a while. And the difference between a recession and a Great Depression is actually the length of time, the severity and the length of time. And what people are projecting right now is that this recession may go on for a long time. And if recovery slows, especially in global economies, emerging economies like Nigeria would suffer the most, because we depend on our bilateral trade with these developed economies. So we need economies, global economies, especially like US, China, to pick up, and then you see it trickle down.
All right. Now, we've seen the Naira trade at the non-deliverable forward Forex market at about 538 Naira per dollar for 12-month settlement. Now, if this rate becomes reflective on the spot market, what would be the implications for inflation?
Yes, so the non-deliverable forwards market is a futures market, and it's created to actually help investors avoid whatever fluctuations there are in the Forex market. And it just shows you what kind of sentiment investors have about the Nigerian Forex market and the CBN's ability to continue to sustain the currency at current levels. So at 535 Naira to a dollar for 12 months, it's actually worrisome, because that means, like you mentioned, inflation. Nigeria depends a lot on what it imports from other countries. So if the exchange rate actually increases, imported inflation definitely would increase. We're already seeing domestic commodity prices increase by about 50% in just 1 week, and that is actually going to feed into consumer prices. So on one hand, the exchange rate adjustment is pushing up prices. On the other hand, logistics issues, to actually get the goods from the farms to the markets, definitely transportation costs. So yes, fuel prices have reduced, but then still, even if you have fuel but you cannot move around, it's a problem. And we know at the Governors Forum that the governors are actually contemplating on creating or at least implementing a lockdown among states. If that happens, it makes it more difficult to transport goods and services. But there are also measures being put in place. We know haulage operators are trying to cut their costs just to at least ease the burden on consumers. But these are good measures. These are good palliative measures to try and at least relieve the burden. But the impact on consumer prices will still is significant. So should we really be worried now that the governors are now talking about 2 weeks restrictions? Now, in terms of there's been some kind of projection of farming. Should we expect that now? Well, Nigeria has always had a poverty situation, and we've also had, currently we still have rising unemployment rate. And right now we're moving into the planting season, which is when aggregate output reduces and supply thins out. So that, coupled with what is happening now, definitely it could lead to scarcity. Definitely might be in the horizon right now, as what we're looking at. Now, looking at your commodities price movement, you're saying that domestic commodity prices have risen 50% in 1 week. Yes. Which of the commodities have seen this rise in price and why? We've seen in Gary, basically in staples, we've seen even the flour prices have increased from the factory price is about 12,200 naira, so the retail price is trading for about 12,700 naira, and it's cutting across most commodity markets. And like I mentioned, it's the planting season. Ramadan has also started now, and so definitely, usually during Ramadan period, the demand for consumer goods actually increases because you're cooking for more people. But with the restrictions in place, definitely public gatherings have been reduced, so the impact might be limited, but that definitely we're going to see consumer prices increase. And if people are spending more just to purchase these goods, it gets to a point where even if salaries are reduced and people are not working, the income effect kicks in. If you don't have enough money to buy these goods, you're not going to buy anything. And if the demand falls, you might actually see these prices that are inching up start to trickle down in the near future. And in all of this, what is the outlook for domestic commodities, particularly if we have to see another lockdown? Well, the outlook is that commodity prices will still keep increasing. In April, we're projecting an inflation rate of about 12.5 to 13%. And if the lockdown is extended, and even among states, it becomes more difficult, like I mentioned, and consumer prices will keep increasing. All right. Thank you very much, Damilola. Thank you.